Okay, so a lot to request about SDI Group. Let's just jump in. As you can see, in the last 12 months, things have fallen quite significantly for the stock price. It used to be around about $2 a share. Now I think it's about 60 pence. It looks like it's in free fall. So I'm going to touch on the obvious reasons why this is happening, and I'm going to also explain what I'm planning to do moving forward. So these guys are following the buy and build or serial acquirer strategy out of the UK, focusing on scientific instruments. Look, blah, blah, blah. You can watch YouTube, you know how that works. You can watch my previous videos about getting a background in what this company actually does, but I'm just going to assume you already know. What I think you really want to know is why the dramatic fall. Now, I'm in this one as well. I was buying at around about a £1.60 or so, something around there, and it's now at like 60p. So I have had a bigger than 50% pullback in my investment in this as well. So it's good to go through and try to figure this out. Okay, some of the things that have happened have been, there was an impairment of a portion of one of their subsidiaries, Monmouth. They've had to, essentially they paid overs for this business, and it's probably not worth what they paid. So they've had to do this impairment on that. There was obviously going to be a slowdown after these. They had a big, large COVID order, and for some of their businesses, some of their subsidiaries, but that made the optics look weak and unattractive to investors. But it's on the back of the comparables from this big order from 2021 to 2023. Something that also happened was their guidance was revised down significantly. That was just a few months ago. It was because of a delay in some significant orders, and that just added on top of the already impairment charge that they were already dropping, plus the bad comps. So yeah, there's a few things in a row there that look like, well, wait a second, is this thing falling apart? And then only just a few weeks ago, you had Mike Creedon, the guy responsible for growing the business from the £3 million little tiny business that it was to even today, it's still about 70, 80 million pound. Well, he abruptly left, and I don't know any more information than you guys do. I reached out to him, but it was through his work email, and I don't think he's getting his work email anymore. This felt like a red flag at the time, as Mike and his intellectual property in the industry and the connections that he has, well, that's now all gone. Am I concerned? Well, I was concerned when he stepped down for no apparent reason. That has caused me to dig in. So that leads me to where we're at today. Trying to figure out whether this thing I think is going to go all the way down to zero based on that graph that's going like that, or do I think that things are going to stabilize and hopefully come back up higher, and that's what we're going to focus on now. So we have the digital imaging segment that has fallen off big from the COVID orders. This is going to take some time to normalize. There's some destocking needing to happen as well. So probably in that digital imaging segment is going to be a bit of it's a few years away, I think, from growing and normalizing from there, but it has probably got to a bottom level, I think. The next fact is that trust in management has been hurt with the big revising of their guidance and then Mike leaving. But if we look at the debt levels, they're still pretty manageable at around about 2 times free cash flow at the current even depressed free cash flow levels. If we look at valuation, SDI Group is trading at around about 10 times estimated free cash flow, and that's depressed estimated free cash flow. Stephen Brown, the new CEO, who was only hired in September 2023 as the COO, he's now stepped up as the CEO. So this is what he said, but just remember, it's a scripted response. For over 10 years, SDI has grown value by focusing on a clear and straightforward strategy, and this will not change. We acquire private companies at a significant discount to those on the quoted markets. These subsidiaries are then encouraged to grow for the benefit of all stakeholders. I am pleased to report that we continue to have a number of new acquisition opportunities under review. So my take from that is that the plan is for nothing to change. Stephen's just going to step in and just keep the train going, and that's really all we wanted to hear anyway. So I think that's good for now. I don't know if there's going to be any big changes coming up soon. From someone on the outside looking in, I think the thesis is still there. The model itself isn't broken. They still have a range of good businesses. They're still profitable. Yeah, there's some work to do to get this moving strongly again, but this is also the typical ups and downs of business. I think that single-digit organic growth in the medium term is what's going to happen. I think that you've got the 15, maybe 20% growth through acquisitions as well. And considering it's like 10 times depressed free cash flow right now, I think it's actually really cheap. Now, something that I'm going to be doing very soon is I'm going to keep track of SDI Group in my weekly email. It's called Yes Stocks, No Stocks. There's a link in the description for that. Also, to make an investment in SDI Group, which I've done, I've used Interactive Brokers. There's a link in the description for that. It gives you access to international markets, which is perfect for this situation. So my plan at the moment is to wait for earnings that's going to come out around May, and I'm going to see if they generate around $6 million in free cash flow. That's the lower end of their guidance. I'm going to give Stephen Brown a chance to settle into the position and see what the commentary is around the subsidiaries and their performance. And something I like about serial acquirers like SDI Group is that with a good amount of diversification across many businesses, a few of those legs can break, and the table is still going to stand. So the new CEO, he can try to fix some of those broken legs. He can buy some new legs. He can strengthen up the legs that aren't broken. The table is still there, and the table is still, and in my opinion, quite strong. And at 10 times depressed free cash flow, I would say that if the business continues forward, this will be an attractive price for a business that can grow well into the future by just doing what they've been doing in the past. But I have to acknowledge that there is a little bit of hair on this at the moment. But the business model is getting tested, but I don't think it's broken. I'm okay to wait and see how things unfold. I don't think there's any need to panic at the moment. But of course, maybe I'm wrong and things fall apart now, but I just think that seems quite unlikely. With plenty of good subsidiaries that they have, they're performing well. And I also get it, if you're a seller right now, I think that might be a risky move, more risky than taking no action at all and just waiting to see how things unfold. I feel like that's the safer bet here. I just think that from all those things that I've just mentioned, that the medium term still seems unbroken at the moment. So that's my thoughts. I hope you've enjoyed. You probably have interesting opinions about SDI Group and what's happened, and with Mike leaving, and all the guidance and all the different things that have been happening in SDI Group. It's an interesting subject at the moment, and something that I'm looking forward to following along for the next few months anyway, until we get that earnings report in May. So stay tuned. Hopefully we don't get any shocking press releases coming out between now and May, but we'll just have to sit back and wait and see, and that's my plan at the moment. So, all right, hope you've enjoyed.